All right, welcome everyone. My name is Reverdy Johnson. I'm the Director of Research at IntroAct. I was the one sending out the invitations and the reminders, and appreciate your patience with the multiple emails, but we wanted to gather a good audience here for the presentation today. At IntroAct, we do a variety of partnerships with investors and corporations and research providers. Our role with research providers is to help them augment the distribution of their content. And we really aim to help introduce them to new investors who may be interested in their work. Today, we've got a presentation from McAlinden Research Partners. They're going to share their process, their methodology, as well as diving into several of the themes that they have right now, including vertical farming, cannabis, and crypto. So I'm going to turn it over to them. I'll ask, if you haven't already, please mute yourself if you are not a participant, just so that we eliminate or reduce as much background as possible. So now I'll turn it over to Joe McAlinden Sr. To introduce the firm.
Thank you, Rev. So I'm Joe McAlinden, generally known as Joe Mac. I've been on Wall Street for longer than I can remember, over 5 decades. And we've had McAlinden Research.
Yes, we got to get on that too. Yep. I'll send it.
Okay, so I've been, as I said, on Wall Street for over 5 decades. And through that period, I developed an idea about efficiency in research and portfolio management and alpha generation. And I came to believe that more than anything, what matters is getting the theme right. And so we've put together a company, and for the last 8 years, we've been providing ideas to portfolio managers at hedge funds, long-only managers, sovereign wealth funds, many RIAs as well. So with that, let me introduce the whole team. And first, I'll tell you a little bit more about myself. So as I said, I've been around a long time. I actually started at the New York Stock Exchange and then went to a small brokerage firm, and from there 17 years at Argus Research, first as an analyst, then research director, and my last 5 years as a CEO, and moved on then to be a partner at Dillon Read, which at the time was a independent investment bank. It's now part of UBS. There I built up their research department and then spent the last few years as economist and strategist. In 1995, I moved on to a company called Intercapital, which was a money management subsidiary of Dean Witter. And about a year later, they merged with Morgan Stanley, and I wound up as CIO of Morgan Stanley's all asset management activities, which we combined with Dean Witter and Morgan Stanley to form an entity called Morgan Stanley Investment Management. So that's pretty much my story. We've got more to tell about the rest of us. So let me now turn it over to our Chief Operating Officer, Joe McAlinden, of the same name.
Hi, this is Joe Jr. I obviously haven't been in the market as long as our chairman and founder. I started my career in the early 90s at an investment bank that doesn't exist anymore called Bear Stearns. I was a distressed credit trader on the high yield and leverage finance desk for about 15 years. I moved around to a couple of other shops and landed here at MRP, Capital Advisors, which is our parent company. and oversee all the financial services relationships, and pitch in on the research ideas and tradability of themes where I can.
Hey everybody, good morning or good afternoon, depending on where you are. My name is Sean McAlinden. I am Vice President of Research here at McAlinden Research Partners. I've got 4 years of research experience, all here, came straight out of college where I went to Rowan University. I got my BA in economics there, and I wish I had such an esteemed background as everybody else. But when I was in college, I was painting houses. I was painting houses and doing accounting at a small place out in Philadelphia. So this is my first company that I got to out of college. I've been learning the process here from both the Joes and the rest of our team. And it's been a great experience. I'm really happy to be here. And we're ready to show you some thematic topics today. So.
Hi, everybody. My name is Kieran Lynch. I am the newest member of the team. I have about 9 months of research experience, formerly at HT Partners, which is a family wealth management company in Connecticut, where I learned a lot about financial planning and family wealth management and investment research. And I've been with the team here for about 5 months now after graduating from St. Joseph's University, and happy to be here as well.
Okay, so let me tell you a little bit about where our process came from. Essentially, over 50 years of experience, I did come to see that the efficient market theory guys are right about some things and wrong about other things. But the overall, all legally available information, more than ever with the internet and digital markets and whatnot, get priced in very quickly. And as a result, the market generally is very efficient about information that comes out in the continuum. Earnings, upgrades, analyst changes, news, company news, that's, as I said, part of the continuum of what's going on in industries and companies. But every once in a while, something other than incremental changes occurs when there's a major disruption, which creates a radical break with the equilibrium that's been previously established. Now, this can happen in a large company, or it can happen externally in an industry environment. And John, can you go back to the previous page? Yeah. So one of the things that we look for when we think we have found discontinuous change or a major disruption is that everyone else hasn't accepted it, even if they've heard about it. And that tends to happen because of something that the behavioral people call status quo bias. And so we look for status quo bias, not to prove that we're the first. We're rarely ever the first on a theme. There are a lot of players in this business, hundreds, thousands of analysts and portfolio managers, but we want to be among the early ones. And that happens if you get a hold of an idea early and a lot of people don't accept it. And that happens because we're all human, and we do all at times have a bit of status quo bias. Lastly, what we look for is a lag between the occurrence of the disruption, whatever it is, and Joe Jr. is going to walk you through a little bit more about how that works for us. But we do look for that and have various ways of trying to confirm it. So with that, I'm going to ask Joe to dive a little bit more deeply into the process before we move along to some specific ideas. Joe?
All right, thanks. So the chart you're looking at here is basically the basic framework for what we look for in a good investable theme. The MRP formula is the disruptive change that Joe Sr. talked about, plus status quo bias, equals the thematic opportunities that we look for. So first, what is the disruptive change? How can you define it? First, is it truly disruptive? Is it a truly discontinuous change from the equilibrium? So, as you said, it's not the earning surprises or misses or a change in leadership at the company. It's something truly, usually exogenous, that no one saw coming, the analysts included. And so it catches the participants of that group off guard. It can be anything from technological innovations like cryptocurrencies and digital payments, electronic vehicles. It has to be true, as Joseph Schumpeter called it, creative destruction, truly a change in the paradigm. Could be business cycle turning points, an inflection in the economy or industry, like coming out of COVID, or a top of a bull market as things are getting overpriced. It can be government regulations, anything that would, at the end of the day, have a material effect on the profitability of companies or tradable securities, for better or for worse, in that market. So things like cannabis legalization, 1-2 states is not a tipping point, but a dozen or more, you start to get that tipping point where you're looking at, federal legalization. So same thing with online sports betting. It could be an election, something that usually where the incumbent or the favorite projected winner does not win. So when the underdog, they didn't look too closely at his policies or whatever, not necessarily in the US, but sometimes in smaller nations that are resource rich, that have massive impacts on commodity prices. It could be new business models like cloud computing, rideshare, again, anything that upsets the current paradigm. And then, natural events like extreme weather, natural disasters, global warming affecting commodity prices, travel, anything related. So moving along in the continuum in bullet 1, item 2 is the DC, as we call it. So first we have to identify, can we invest in it? Are there tradable securities in the basket that are going to be affected by this in some way? Then we have to look at, is it priced in? So is there the DC sweet spot, as we call it, the item 3? So as JJM mentioned, we look at a lot of behavioral economics studies, like study of heuristics by Daniel Kahneman. And you may be familiar with some of these, like gambler's fallacy, the number's going to come up again, or loss aversion, where people put a much greater weight on loss than they do on gain. We find status quo bias and confirmation bias really effective in identifying this mispricing of the market. So status quo bias is a tendency to keep things the way they are or within the current paradigm. And confirmation bias, or as some people call it, Semmelweis reflex, named after a Hungarian doctor who, by the way, we should all thank for teaching us to wash our hands. He was one of the first scientists to get on that bandwagon as far as washing hands kills germs. Anyway, so it's a tendency to reject new data that doesn't already prove your hypothesis, or as in analyst's case, their rating. So is there a rejection in the marketplace? And if so, that's our sweet spot. There's that triangle. So then can we define a basket of securities from that pool that may have been affected by it? So who are the most affected by it? at the end of the day, who's going to have the most effect to their bottom line. And the implementation of it is always in a basket of stocks to eliminate or reduce idiosyncratic risk. There's also a lot of academic research has shown that most portfolio alpha comes from getting the group right or industry and not the individual stock selection. So ETFs where available is how we show the mispricing of the securities and how we benefit from that in the sweet spot. And then 4, as the market starts to price in all this new information, it's not rejected wholly anymore. Analysts are raising their estimates. They're changing their holds to buys. We're already looking for an exit point where we're up to bullet 5. And sometimes it can overshoot. Like look at lumber, for example. We were long lumber mills and the commodity price was way overvalued relative to historical norms, even given the shortages and demand issues. So we exited that theme in a timely fashion. So that's the format that we follow. It's very regimented. It's very structured, and that's how we come up with all the different themes that we have in our realm. Sean?
Right. So let's actually get into some of these themes. This is our current list of themes. This list is always changing. We're always adding new things, taking things off, following that process that Joe just described for you. And as you can see, we've kind of got an eclectic mix here. Some commodities like battery metals and agricultural commodities. And then we also have financials. We have with the US banks, I should say, and aerospace and defense, long solar. And all of these things, we have identified them as fitting the mold of that exact process that Joe laid out in the last slide. But there are 3 that we want to highlight today, and we should finally start getting into those, right? So today we have cannabis, we have digital payments, and then we have vertical farming, which is not a theme, and we'll explain that when we get there. But that will actually tie in a little bit with our long agricultural commodities theme. So let's get started off with long US cannabis, which we launched on May 21st, 2021. So about 2 months ago now. And that actually was a recalibration from a long cannabis theme that we had launched back on January 8th of 2021. If you look at the chart on the screen there, you'll see we added that sort of right after the Georgia special election, when the Democrats took it's 50-50 in the Senate right now between Democrats and Republicans, but that shifted the balance of power toward the Democrats. And obviously, the Democrats have much larger goals of decriminalizing cannabis and bringing down the federal prohibition. So that was the initial onus for that. But our recalibration comes from the fact that almost every country that legalizes cannabis does put some kind of restrictions on imports so that they can protect the domestic market. And so we looked into the US market and we saw there were these what's called multi-state operators. So if you ever see MSO in the cannabis industry, that stands for multi-state operators. And you can see there's an ETF that we use to represent that theme. All of our themes are represented by ETFs or a basket of stocks. And the ETF MG Alternative Harvest MJ was the old one we use, and now we use Advisor Shares Pure US Cannabis ETF, MSOS, and obviously that ticker comes from the multi-state operators. So if you look at the top 5 holdings, you can see some probably familiar names if you know anything about the cannabis industry: Green Thumb Industries, Curaleaf Holdings, TrueLeaf Cannabis, and TrueLeaf is especially interesting because they just acquired Harvest Health and Recreation, which is when that transaction closes, TrueLeaf is going to be the largest, most profitable cannabis company in the world on the basis of earnings before interest, taxes, depreciation, and amortization, EBITDA. So looking at what's happening in the US right now, 37 US states now allow medical marijuana and 19 allow recreational use. And Connecticut became the 19th just last month. But what's more interesting is that the latest state to bring in medical marijuana was Alabama. And that is reflecting a shift among American conservatives toward, or rather, I should say, away from regulation on cannabis. They're having more of a libertarian attitude toward it, saying that these laws don't really make sense anymore. There's obviously some kind of medical benefit to marijuana, and conservatives are sort of lightening on that issue. And we can see that in Missouri, Missouri and Alabama, as I said, and all across the country. Mature states like Colorado, Oregon, and Washington, those are averaging 26% year-on-year sales growth this year. And newer states like Illinois, Massachusetts, Michigan, and Pennsylvania are averaging 136%. So that's really strong growth that we're seeing, especially when it's actually up against very difficult comparisons from last year. In the midst of a pandemic, a lot of people thought there would be a downturn in cannabis, but that actually wasn't the case for a couple of reasons. One of those reasons being that the cannabis industry was deemed an essential business. And second was e-commerce. E-commerce, really, you saw cannabis sales volumes explode because they were still able to get them online. They were being delivered. There was all kinds of interesting stuff going on at that time, and they really defied the expectations. But like I said, this year is even bigger against those tough expectations from last year. And a big part of that is the number of dispensaries in this country. Total number of retail stores and dispensaries in the US grew nearly 21% through 2020. So this is growth on the ground level, on the e-commerce level, all across the spectrum of this industry. One of the only things really holding cannabis back right now is banking legislation. And even that is sort of being worked toward. In the US House of Representatives, they passed what was called the Safe Banking Act. And that was to eliminate any kind of prohibition of the US cannabis companies from using federally chartered banking institutions, which is a huge block for the industry. But that not only did that pass the House, which has a Democratic majority, it passed with more than 100 Republicans voting in support of it, which would be almost unheard of a few years ago. So as I said, this conservative kind of shift is really one of the big things that's playing into this, along with Joe Biden's victory in the 2020 election and a complete overhaul of the laws as we know them. One last thing I'd like to say too about the conservative shift is that Justice Clarence Thomas, probably the most conservative justice on the Supreme Court, has even said that the federal prohibition and current laws at the federal level around marijuana are outdated. This half in, half out system is just, it's completely inefficient, and it's not really fair to these businesses. So. And actually, one last thing I wanted to mention as well, looking through my notes here, sorry. The final thing I wanted to mention was that the new legislation that just came out yesterday, that's why it's sort of down here at the bottom of my sheet. I was preparing for this. Chuck Schumer, just obviously the head of the Democratic majority in Congress, in the Senate, I should say, just brought out the first bill in the first real serious bill in the Senate to eliminate the federal prohibition of cannabis. And that bill is going to face an uphill battle. Obviously, it's going to need double-digit Republican supporters, which it might get some, maybe not double digits, but this is a new paradigm. This is the turning point. This is the point at which this is never going back. The trajectory is locked in. Cannabis is heading toward legalization in this country, and it's already actually a huge business, but it's going to be a huge business. It's going to be a legitimate business. And that's the key word, right? Legitimacy. That's what cannabis has lacked in this country. And now it's going to unlock that. So I think that's all we have on cannabis, but I'd like to move on next to the second topic at hand, long digital payments, which we launched on February 5th of 2021. And this name is sort of our way to encompass all of the things that are happening around digital assets. As we see here, major payment firms like PayPal and Square have enabled cryptocurrency payments and transfers. And that's a really key thing to understand. In the past, PayPal and Square had quote unquote cryptocurrency payments, which meant you had you owned paper Bitcoin. You could buy things with Bitcoin, but it wasn't really Bitcoin. It was Bitcoin on paper. You didn't actually own the cryptocurrency. But now PayPal and Square are going to have actual wallets where consumers will own cryptocurrency and it will be settled on the blockchain, all of these payments. And that's a major change from how we used to think of cryptocurrency payments. And along with that, major Bitcoin and Ethereum miners are raking in significant revenues from robust transaction volumes. This goes obviously without saying. Huge volumes of transactions means big revenue for the miners who facilitate those transactions. If you don't know how mining works, the blockchain is supported by the computing power that comes from these miners. They facilitate the transactions. They receive a reward for the blocks that they mine, so that the ledger, which is the blockchain, can run smoothly, efficiently, and facilitate these transactions. So as you see, we added that on February 5th of 2021. And this is really interesting, is that was a Friday. And on February 8th, which was the Monday, I remember waking up and checking my phone, and I saw that Tesla had purchased Bitcoin, $1.5 billion of Bitcoin for its balance sheet. And that was, at the moment, a great moment. It's a little bit up in the air now because of Elon Musk and his Twitter account. But overall, that was significant because it showed that many companies were now putting Bitcoin and other digital assets on their balance sheet. And that's why if you look at the ETF here, which we track this theme, by the way, with the Amplified Transformational Data Sharing ETF, the ticker for that is BLOK, block. And the top 5 holdings are MicroStrategy Incorporated, PayPal Holdings, Square Inc., Digital Garage, and Coinbase Global. Obviously, everyone knows what Coinbase is. It is the biggest cryptocurrency exchange, had a gigantic IPO this year. But MicroStrategy is the interesting one because MicroStrategy is not a cryptocurrency or a payments company. They are the company that holds the most Bitcoin on their balance sheet. They own, I think, in excess of $5.5 billion in Bitcoin on their balance sheet now. So this is really an all-encompassing kind of theme. It's the payments, it's the miners, and it is the institutional adoption of this as an asset. Because it really wasn't long ago at all that Bitcoin had no legitimacy. It was not seen as any kind of serious asset. Some people said it was a commodity, it was this, or some people said it was fairy dust. I don't think we're dealing with that anymore. I think we're getting very serious about digital assets and where they're going. As you can see, I mean, even the Federal Reserve and all of the world central banks are now, they're recognizing that this is a phenomenon that even they have to get behind. More than $1 billion worth of cryptocurrency was spent by consumers through Visa's crypto-linked cards in the first 6 months of 2021. If you look back in years past, those numbers were a fraction, not even like full year, not even a fraction of what we've seen in the first 6 months of 2021. And more than $104 billion are now locked into DeFi protocols. Now, if you don't know what DeFi is, that is short for decentralized finance. And decentralized finance is exactly what it sounds like. It's an autonomous financial system. Think about decentralized money markets. There's one protocol called Compound. You can see that at compound.finance if you want to write that down. And compound.finance is a liquidity pool where people pool their assets, whether that's Ethereum, Bitcoin, Tether, which is a stable coin pegged to the US dollar, all kinds of different digital assets. They pull them into one liquidity pool and they can be lent out. And those who put their assets in collect interest for keeping their money in there to be lent out. So right there, that is autonomous money market. And it has governance based on who owns the most comp, which is the native token of compound.finance. So all of that is very, very exciting. And that number, 104 billion, that is compared to only $1 billion at this time last year. So that is exponential growth, unlike anything we've seen in a very long time. So as you can see, it's been a little bit of a rough year for Bitcoin, and that's why we choose to track this with the block, because this is not a theme on Bitcoin or Ethereum or any specific digital asset. This is a theme on adoption. And so investing in the companies that are doing the adoption is a much safer way, and one way that people who maybe need a little bit more, or they can't go super aggressive in their portfolio with Bitcoin and Ethereum and these assets that can move 20% in a day. Something like an ETF, like the block, is the best way to express that. And one final thing I would like to talk about there is the most significant piece of adoption that we've ever seen for Bitcoin happened last month when El Salvador adopted Bitcoin as national tender. And the reason you can see how crazy that is when you put it into perspective of 2011, people said, well, Bitcoin, that's just something that people, nerds in the basement use. And now it's something that, oh, well, that's just something that small countries use. That's sort of the way people try to, the diminutive way people try to say, oh, well, that's nothing. It's just El Salvador. But El Salvador is very significant for the reason that 70% of the people in that country are unbanked. And when you think about what that means they don't even have a debit account. They have no way to store their money. They have no way to save. They have no way to build assets. And now with a Bitcoin wallet, which every single citizen of El Salvador is now entitled to $30 of Bitcoin and a Bitcoin wallet address from their government, that's a game changer. That's something that they would have never had access to, and El Salvador simply does not have the assets on its own to create that kind of financial infrastructure. But now, with the advent of the blockchain, that is a reality for everyone in El Salvador who is able to access the internet, essentially, to be able to have a financial system, a global decentralized financial system that can overcome the problems we oftentimes see with developing economies, particularly corruption. It's very, very difficult to create corruption in a blockchain because there is no governance. Something like Bitcoin is not governed by anybody. It's governed by mathematics. The Chinese mining controversy that we've seen play out over the last month, which is likely because the Chinese Communist Party is rolling out their digital yuan. So 90% of Chinese miners have gone offline now. And that was portrayed as this big cataclysmic scenario. And the hash rate, which is how quickly Bitcoin is mined, did drop by about 30%. But every 2 weeks, the Bitcoin blockchain resets the mining difficulty autonomously based on whatever speed is needed to mine 10 blocks per hour. And that's based on a moving average. And so once the network recognizes that a significant amount of mining power has dropped off of the network, it resets the difficulty so it goes back and always runs at the same speed. And stuff like that. I mean, that's, how do you think of something like that ahead of time? It's really, the technology that's locked into the blockchain is really something amazing. And by the way, all those miners that got shut down in China, those are just going to be displaced. They're being airlifted to Iceland, Kazakhstan, the US. All those miners will be back online eventually. They're not just getting rid of all the ASIC and GPU units. Those are going to flood out to different places, and we will see a return of the Chinese mining capacity, but we will see it in other parts of the world, which actually many Bitcoin enthusiasts are actually very happy about that. Nobody was happy that there was so much computing power concentrated in China, but that is no longer an issue. And as I said, digital payments is something that is transformational in so many ways, especially the three we laid out, which once again, I want to say, payment firms, miners, and institutional adoption of this asset on balance sheets. So moving on from here, we want to go into vertical farming. And for that slide, I'm going to hand it off to our research analyst, Kieran Lynch.
Thanks, Sean. So yes, the third and final theme that we're going to highlight today is vertical farming, which we do not currently have as a theme. One of our current themes is actually long agricultural commodities, for which we use the Invesco DB Agriculture Fund. And that fund basically tracks the price of the futures contracts for major crops in the US, including corn, soybeans, sugar, and coffee, as well as lean hogs and cattle. So we added long agricultural commodities to our list of themes on April 7th due to the disruptive change seen in the farming industry. And that change was climate-based. It was more severe and more erratic climate-related events in the western part of the US and more specifically a drought. So as you can see at the top, currently 93% of the US West is under some form of drought, while nearly 60% of that is considered extreme. And just for a comparison, last year, around this time last year, only 27% of the US West was experiencing drought. So the change from one year to the next is, more than significant. And kind of to build on top of that is the fact that during the winter, the US West received the lowest amount of rainfall ever recorded. They had 25 to 50% of typical precipitation levels seen, which has not done anything to help the dry conditions that farmers in the agricultural industry are dealing with. A lot of the main reservoirs in the West are currently at record low levels. So two of the main reservoirs being Lake Mead and Lake Powell, which are both located around Utah, Nevada, and the southwest of the Southwest, are basically at their lowest levels ever recorded, and 40 million people are served by those two reservoirs, which has led state and local governments to declare water shortages and water conservation tactics, which is really taking the farming industry, they're taking the biggest hit, because with limited irrigation and limited water usage, their crop productions fail, their crop yields are reduced, the health of the crops is diminished. So they're really taking the brunt of it. And it's not really even just specific to the western part of the US, it's starting to spread across the country, and more specifically in Iowa, which is the largest US corn producer, is starting to see at least half of the state in moderate level of drought. And this is where I'll move into vertical farming, because MRP doesn't think that there's a really quick solution to these climate-related headwinds that the agricultural industry is dealing with. However, a long-term solution that we've come across in our research is vertical farming technology. And to move into that, by definition, vertical farming technology is basically the process of growing crops in an indoor controlled environment in vertically stacked layers. So the technology strives to achieve, greater yields, fresher products, and much, much less space. And it's really important to, conserve your water usage when it comes to food production in the agricultural industry. As you can see, 70% of all global freshwater consumption goes toward food production. And vertical farming does just that. It requires 95% less irrigation than traditional farming. And which is, as we see right now, that's crucial for farmers that are going through these water shortages where, state and local governments are telling them they can't use the normal levels of water that they need to produce the level of crops that they typically do. And even more importantly is the fact that 95% less irrigation, 99% of that is recaptured and reused in a vertical structure, instead of just going through the ground and becoming wastewater as we see in traditional farming systems. And as I touched on a little bit earlier, the yields in these systems are exponentially greater. As you can see, crop yields can rise as much as 700% due to the ability to operate 365 days a year. There's no external environment that these farmers and crops have to deal with. It's controlled due to artificial lighting, and the water is reused. And the fact that they can operate every single day of the year drives those yields higher, not being stuck into just working during farming season. And lastly, the greatest part about, or one of the greatest parts about for vertical farming technology is the fact it can condense, hundreds of acres of farmland into the size of a big box store. And that's actually really important when you think about it, because the size of a big box store can fit in a lot of urban areas. So let's say New York City, for example, they don't have to ship all of their crops from California, let's say, across the country where all those crops lose their freshness. You have to pay a lot in transportation costs, and it's not really environmentally friendly. With vertical farming, the fact that you can put a vertical structure in these urban areas basically eliminates transportation costs, adds more production to retail stores. Sorry, I just see a question. Please define the size of a big box store. So I took that definition as basically the size of, a Walmart or a Whole Foods, kind of like one of those supermarkets, but the entire thing is fleshed out and all there are is just vertically stacked layers of crops. No problem. And just to get back on track, yeah, the fact that they can be constructed in urban areas, makes the products a lot more fresh. It gets onto the shelves of retail stores much quicker, leaving inventory stocked. And, they're all just in better condition. And really the only thing hindering the vertical farming industry, which is currently, in its infancy, it's a niche market, from taking over, a significant chunk of the agricultural industry, is the high startup cost, since there's a lot of technology that goes into, creating an indoor environment that kind of works as you're in an external environment. And yeah, so that's something in the long term would be very beneficial for farmers and, for the price of agricultural commodities. However, we see farmers and the agricultural industry dealing with these climate-related headwinds at least through this year. The drought is not going to go away. Drought tends to build on drought, meaning that farmers are going to be left with drier conditions and limited irrigation at least through this year. And vertical farming technology is a really interesting way to combat those external factors, but it's something that we won't see for at least a few years. And I'll conclude by passing it back on to Sean.
Before we move on, Kieran, I just have one question, because I know you wrote this report. As you can see at the top, scaling vertical farming tech could be key to battling climate-induced crop and water shortages.
Yeah.
In that report, you kind of made the point that in the vein of our theme, right, that these high commodity prices are going to persist, which is why we have it as a theme until some kind of innovation like vertical farming becomes more investable and becomes much more well-funded and ubiquitous, right?
Correct.
Right. So
and then, before you move on, I also just saw there was a question in the chat for what kind of crops can be grown vertically. So again, since it's such a niche market and it's in its infancy, they kind of just tend towards leafy greens currently. So, like different types of lettuce, Brussels sprouts, things of that nature is what the technology is limited to. But, as investment rises and the technology advances, as we're, expecting to see through the decade, essentially any sort of crop can be produced in a vertically stacked system.
Great. Okay. Yeah, let's move on to the next slide here. And this next one, we want to give you a look at our current list of themes again, but with the performance that we've locked in so far with them. As I said, we use these ETFs. You can see our themes as they were added in chronological order, the date initiated, the funds we use to track the performance, or baskets. As you see, we have long drugstores as a theme. We actually use a basket that we created with CVS, Walgreens, and Rite Aid. Return since the theme launch, and then the S&P 500's return over that same period. And once again, you could see we have quite a eclectic list, as I said, with long silver and silver miners, cybersecurity, which has obviously been really something I shouldn't say special. It's been actually pretty tragic with all of the cyber attacks that have gone on, but that is really just a reflection of the underinvestment in cybersecurity. Semiconductors, battery metals, sports betting, US banks, UK equities, digital payments, as we talked about, which, by the way, I want to put in one correction to what I said earlier about digital payments. I said 10 blocks per hour was the moving average for the Bitcoin miners. What I meant to say was 1 block every 10 minutes. So a new block is mined on a moving average, 1 new block every 10 minutes. So after moving on from there, long energy, long drugstores, long agricultural commodities, as we talked about, long uranium, short long dated treasuries, which is our outlook that longer term interest rates will be rising in the future. Long US cannabis, long solar, and long aerospace and defense, in that order. And as you can see, we keep track of all of these, and this is how we reflect our performance. I want to check the chat really quick because I see there's a couple messages coming in.
Yeah, I was going to jump in real quick.
Please go ahead, Kieran.
So one of the biggest reasons that we've yet to, add vertical farming as a theme is it's, the investability of it is very limited. There's really only a handful publicly traded vertical farming companies right now, two of which we highlighted earlier that I meant to touch on, App Harvest and Cubic Farm Systems. I think Richard threw two other ones in there. And one of the biggest ones, actually, Aero Farms, I think it's AFRM is the ticker, is expected to IPO at 1.2 billion this month. So that's one of the, more updated, newer developments in the industry via SPAC.
Okay, let's keep moving. And I went back to that. And so back to our sort of broader list of themes. We've closed themes this year too. Obviously, we close themes all the time. We close themes when, as Joe said at the very beginning of this, we feel that the market reaction has not only reached equilibrium, but perhaps overshot what should be priced into the market that we've recognized, but status quo bias has wiped out from the market. But once they overshoot, or if the idea might not be working out, it might have just been too early, or things might not have worked out as we expected, we also close themes. As you can see, long package delivery was one of those ideas that didn't really work out as we thought it would. But right after that, long solar, which we added way back in May of 2018, that worked out very well. It was a fantastic theme, one of our best in a while. And the reason we closed that in February of 2021 was after those storms in Texas knocked out all the power. Now, that wasn't necessarily solar's fault. It wasn't necessarily renewables, as some people tried to spin it as, but it was a PR disaster. And we said, that might be the time that there might be people might start thinking more about, what happens with these weather events in solar and wind? And that's pretty much exactly what happened. Long video games, we closed during the GameStop stuff. That was a wild time, as I'm sure you all know. I'm sure some of you will be following the meme stocks still, but we were like, that's not really what we were in this for. But so long online, short brick and mortar retail, that was a pandemic era theme. Biotechnology as well, robotics and automation, 3D printing, home builders, gene editing, lumber, social commerce, long cannabis, which I talked about earlier, how we've recalibrated that to long US cannabis. And our most recently closed theme was long copper and copper miners as well. I'm just going to check the chat one moment here. Okay, moving on from there, I believe that is all we have for you as far as slides go today. These are just some of the sources that we've cited. And I want to hand it back to JSM to talk you through a couple more things.
Thanks, Sean. So yeah, we got some lively chat in the chat box. We'll try to get back to everybody as we can. We'll definitely be working with Reverdy to reach out to all of you. I think there was an early question which we missed in the chat about the slides. Yeah, we'll be making these slides available through IntroAct. I'll forward a copy of these to Reverdy, and he can disseminate them to you. But also we have a website where we publish all of our research. And it's McAlindenResearchPartners.com. There's a sign up box. And currently we're running a promotional offer for this call. And for the summer, for a 60-day trial, if you sign up after the trial, you get 25% off on normal price. And if you are ready to sign up after this very informative and hard-hitting research call, you can sign up now for 50% off the list price, which is $2,500 a year. So with that, I guess I'll hand it back to Reverdy.
Outstanding. Thank you very much, everyone from McAlinden. Really appreciate it. I think that essentially concludes the conference call. As Joe said, I can pass along the slides and make sure I'm in touch with folks, and also pass some information on to the team over there so they can reach out to you as well. So That will conclude everything today. Thanks everybody for coming. Thanks to the McAlinden team for the presentation, and we will all be in touch with you shortly. Have a great afternoon. Bye.
All right.
Thanks a
Thanks,
lot.
Rarity.